We have Manoj Bahety, founder and fund manager of Carnelian Asset Management, joining us. Manoj, good morning. Japan's trade deal is out, but nothing on India. So the deal is also unlikely before August 1st deadline. What is your assessment of how the markets are sensing the tariffs will settle?
Good morning, Lovisha, and good morning to all your viewers also. I think on tariffs, means we are quite positive. The way I think the negotiations are happening and the way US has also taken a pause or again deferred the deadline of increasing the tariffs. I think India is one of the very serious trade partner for US, and so we are quite hopeful that in terms of the trade deals, not only with US, I think we will see a series of trade deals. Means already India has concluded some trade deals with UK, and US, I think, is going to conclude very shortly. And going forward, like we will also have trade deals with the European Union. So I think in terms of trade deals, we are quite positive, or we are not expecting a significant increase in tariffs on goods imported from India. And I think India has taken its stand in terms of like whatever the critical sectors, critical areas are there. There, I think India will take its stand. So we are quite hopeful on that, Lavish.
We're quite defiant about the trade deal at this point. But yes, so far this month, Manoj, FIIs have been net sellers. How do you see the flows to pan out now that the trade deal with Japan is out, but there's no sight for India so far, at least for now?
So I think, Lovisha, if you see last 1.5, 2 years, I think the dominance of FIIs in India's equity market, I think it is going down with every passing month, with every passing quarter. The way we are seeing strong flows of the domestic liquidity and domestic liquidity supply, I think the domestic liquidity has become a bigger factor than the FII flows. In fact, gone back are the days when like a slight selling from FIIs have created significant kind of impact on the market. So the way we are seeing, like if you see SIP, if you see the new mutual fund NFOs, if you see the kind of money which has been raised by PMS, AIFs, and even many of the large family offices. So the kind of domestic liquidity which is there, and I think sooner or later, I would put FIs into two broad buckets. The one are like hedge funds or FIs who want to make like quick gains and who want to trade in India market. They may come in and go out. But long-term investors, be it FIs and DIIs, I think they are quite resilient on India and they continue to remain invested in India.
Okay, all right. DII is apparently taking the call from here on right now. But yes, Manoj, what is your early reading of the first quarter earnings? Do you believe that the early bird results support the FY26 double-digit earnings growth expectations going from here on?
Absolutely, Loisha. If I see, till now, we have seen some results on the IT sector. We have seen results on the BFSI. So on the BFSI sector, if you see overall systematic credit growth, it is around 9%. But if you look at like few of the private sector banks which has reported numbers, their credit growth is in the range of 12 to 13%. There has not been a big negative surprise on NIM, though we expect in Q2 there will be some softness in NIM. And once it settles down, I think in S2 of this year, we will see good amount of credit growth coming back to the system, supported by adequate liquidity in the system, as well as lower interest rate. And in fact, both banks and NBFCs are going to play a big role in supporting this credit growth. And also one other thing, I think one of the concern which was there that there will be some kind of issue on unsecured personal loans. If I look at the asset quality of the banks who have reported the numbers, we are not seeing that kind of issue at all. The asset quality is pretty good. We are not seeing any kind of stress building up, especially on the personal loans. Only one of the segment where we are quite watchful is the microfinance lending. I think there we will have our cautious stand. Otherwise, on the BFSI, I think decent set of numbers with second half of this year going to be much better than the first half. Now, IT sector, if I look at, it's a mixed set of numbers. Deal wins were pretty strong. But in terms of execution of the deals into revenue, I think there we are seeing some kind of muted response, mainly because I think still the Western world companies are still waiting or watchful of the outcome of the tariff. So I think there is some delay in terms of decision making on the discretionary expenditure. And if I look on the margin side, I think margin side IT companies have done a decent job. So again, if IT sector, I would say 1 or 2 quarter, there may be some impact on the execution. But I think second half of this year onwards, there also I see good momentum as the deal wins, which has already happened, start converting into revenues. So I think these are the few early trends of the results. In fact, a few of the new age companies have also reported numbers. Numbers were pretty decent. Yesterday, we have seen a couple of results from the new age companies. There also, we have seen the positive surprise on the results.
Okay. Okay. Manoj, what about the mid-cap IT stocks? Because you did say about the large caps one, the tier one, where they faced, of course, the deal signings were delayed, and of course there was some weak discretionary spends also. But how are you positioned on the mid-cap IT numbers? Because today we have Coforge and Persistent, which will be delivering their June quarter results.
I think both the companies are exceptionally good in terms of execution, in terms of converting the deals to the revenues, and in terms of upward margin trajectory. So I think in the mid-cap IT space, one needs to be very, very selective. While choosing stock, I think one need to choose those stocks only which have got ability to adapt themselves in the changing environment of AI and machine learning. And I think both the companies which you have mentioned, I think they are quite comfortable in that space. So in mid-cap IT space, we would rather play selectively. And within IT space, we are very, very positive on the ER&D space, especially because on the ER&D space, we are seeing a large opportunity size. And in fact, there are handful players, and I think this is one of the sector which is likely to be less impacted on account of AI adoption.
Okay, okay. Let's also talk about banking sector, Manoj, because you did touch upon that you're quite bullish on the BFSI segment. But banks in specific, for both the managements, HDFC and ICICI Bank did indicate that they expect range-bound margins for the rest of the fiscal year because of the rate cut impact. How do you see both of them, and of course the entire banking bank position for the entire fiscal year? Do you expect good, comfort there for investors in terms of run up? And how do you see the entire pack? Because even we saw Axis Bank reporting a little bit of a technical impact.
Absolutely. So, Lavisha, I think the banking sector, if one looks at, I think margins are at a good level right now. One should not expect any uptick on the margins. In fact, in the second quarter, there will be some softness in the NIMs because of the recent repo rate reduction. And this softness, once that the deposit and liability gets repriced, that will get neutralized over next 3-4 quarters after the second quarter. But if one has to play the banking sector, I think this sector has to be played for the credit growth. With benign liquidity condition, with lower interest rate, we are expecting good amount of loan growth returning to the system. And because of this loan growth, we are also seeing good amount of growth in the non-interest income or the fee-based income of the banking sector. So I would say that it is more a play on growth, credit growth, rather than the margin improvement. In fact, if the margin stabilize after Q2, it will be a good news for the banking sector because the credit growth will take care of the profitability growth supported by operating leverage.
Okay, okay. Manoj, you also touched upon the new age companies. I want to talk about like Eternal because that is the talk of the town right now. 3 days of consecutive gains we are seeing on the counter. Strong management commentary and Blinkit also outshining the food delivery impressed the street. But profits that have taken the hit. So how sustainable do you think these business models are, including Swiggy's, where profitability comes at the cost of expansion?
See, I think if I look at this sector, in fact, I think if you talk about Eternal and Swiggy, earlier these guys were mainly a food delivery and now they have migrated successfully to quick commerce. And the way Eternal has managed to reduce the losses on the quick commerce side, that was one of the surprise. And I would say that there is a large opportunity size, especially on the quick commerce. But I think two, three things needs to be cautiously evaluated before taking a call on these players. In fact, one is that the kind of cash burn and the kind of funding which the competition has. So I think last quarter, apparently, it might have happened that the competition in this space has reduced the cash burn, and that might have resulted in improvement in margins. And means still, I think these companies they are present only in tier one cities. They have yet to expand to tier two, tier three cities. So two things which needs to be evaluated carefully: the kind of cash burn which the competition will continue to do, and secondly, how successful this model will be in tier 2, tier 3 cities, because I think the opportunity size for this segment will be dependent on the success of this model in tier 2, tier 3 cities. But the opportunity size is really big, and I think the way these guys have executed, that is, I think, really commendable.
Okay, okay, all right. Manoj, everyone is expecting a consumer recovery, at least in the second half of this year, but valuations have run up. Do you believe that there's still meaningful upside left in the sector?
I think consumer sector I would rather play selectively, like consumer sector where I would say the growth justifies the valuation. In fact, on the consumer sector as a whole, I think two things which will favor the consumer sector this year, particularly. One is that the liquidity in the system. Second is, I would say, even the impact of the tax rate cut which the government has announced, that is yet to it means yet to go in the hands of the taxpayer, and that will eventually come and get spent on the consumer basket. And the third thing is that the monsoon is across the country is decent. So I think this will not only support the consumption on the rural side, but also on the urban side. So I think we are quite positive on the consumption sector as a whole picking up this year, particularly second half of this year. And the other thing which is favoring the consumer sector is that benign raw material prices, because till now the consumer sector was most of the companies were struggling because of the high raw material prices, subdued consumption, and they were not able to pass on the incremental raw material prices to the end consumer. So right now it seems that this year all stars are aligned. We will be more positive on the discretionary consumer names rather than staples.
Okay, discretionary consumer names, that is where you're betting on. But with that, we have to let you go, Manoj. But thank you so much for your time, and we hope that we connect with you soon.
Thank you, Lovisha. Pleasure talking.